when you're driving around, we figure out what's the fair tax to put on the mileage for supporting our roads based on the types of roads you're driving on. So if you're driving on a highway, we'll do this one. If you're on backcountry roads, it'll be a little bit different, this and that. So if you do those things, and if those transactions are small, everyone will say that's fair. You know, everyone just felt that, you know, what is it, like the 7% tax or the 19%? You know, it's like, we just pay that, that's it. And then everything functions.
Scott, think about this. I have a choice between living in California or Texas. And in California, my road tax is 120 Satoshis per mile. And in Texas, it's 30 per mile. And I can just see that, right? I can see all this list of these taxes, right? They're opt-in a sense, but they're consumption tax, right?
Yep.
So, and if I'm only going to be parked at the hospital for 30 minutes or 15 minutes, then the Satoshis just stream for 15 minutes instead of me getting out my app and doing all this extra stuff. And so on the margin, people will be making economic choices, or you would expect that they would.
Yeah.
Based on, and with, you know, if you think about it, you got Starlink, you've got Bitcoin, and you've got a laptop. You're running a business in the middle of Wyoming, right? This opens up a huge amount of livable space in this country and around the world, frankly, in this country. If you're a programmer in South Africa and you've got a Starlink, you know, a Starlink link for your village or whatever it is, and you've got a laptop that connects that Starlink, and you've got a wallet with 20,000 Satoshis in it, you can start a business, right? You can interact with the rest of the world. And all of a sudden, all of this massive amount of brain power is about to come online from developing countries all around the world when they've got high-speed internet and digital money that you can't mess with and that can't be stolen and that is frictionless. It's and we are on the cusp right now of this all happening, and the next decade is going to be nuts.
Hey, y'all, it's Dr. Know-It-All. I am with Dr. Scott Walter again, and we are joined by a very special guest, Andrew Perkins, who is a professor newly minted, I guess, just as of today, as I'm recording this, a full professor at Washington State and chair of the business department. Marketing department. Thank you very much. Sorry, I knew I was off on that thing. Anyway, we are going to talk today. Scott and I did a video recently where we talked about xCoin, we called it that, something that Twitter/X would potentially produce to compete with other cryptocurrencies to create their own internal ecosystem financially. And, you know, anyway, but we're both very naive in this whole thing, or not naive, that's not the right. We're ignoramuses, basically. We don't know that much. Andrew, actually, on the other hand, does know an awful lot. So, Scott, I'll let you say something quick, and then I think Andrew's going to be talking for most of this because he's going to educate us on a whole bunch of stuff about cryptocurrency.
Yeah, I think the whole thing was about the friction in the system. If you want to buy something on Twitter, or if you want to tip someone, it seemed like it was a laborious kind of process you had to go through, you know, through your credit card and everything else. And there were so many middlemen that were taking so many cuts along the way that the creator, the person who wanted to tip, ended up getting a small percentage of the overall thing, especially if you're talking about small values. It was a big value, would be something else. So we use the analogy of, like, you know, poker chips at the casino, where you go and you buy a bunch of these things and you just keep on moving them around to everyone wants, and eventually you kind of cash out. So that was kind of our naive approach of thinking it's just one big ledger, kind of a little bit like a crypto of some sort, that they would go ahead and do it. But it was just our speculation to come up with something so that you could do tips on the scale of 1 penny if you wanted to. And that creator would probably actually see 1 penny or something really, really close to it. And if you have enough people out there that are tipping pennies all over the place, they will add up really quickly. And then you will end up having a system that works pretty well. It's pretty robust. So if I had $20 worth of pennies a month, I would have no problem going around tipping here and there and everything else. A lot of other people start doing it. And then I think some of the really good creators will end up seeing a reasonable flow coming through it, making sure there is no friction and there is no middleman that's taking a huge cut out of that.
Cool. Great. Yeah. So Andrew, and I guess maybe before you launch into that, tell everybody a little bit about your background. I didn't know you had an undergrad in environmental sciences, for example. So yeah, just tell them about you. Take a moment.
Yeah, so I am a professor of marketing at Washington State University. My PhD is in marketing from University of Washington, and my undergrad's environmental science. I was at Rice University for 8 years. I was at Ivy up in Canada for 3 years, and I've been back at WSU. My undergrad's from WSU, as was my MBA. So this is kind of a homecoming. I've been back here for 7 or 8 years and love it. Pullman's a great little town, and it's a great place to raise a family. My research was mostly looking at kind of unconscious processing from a consumer behavior perspective. So how do people process information about advertising and things like that? And recently, over the last 4 or 5 years, something like that, I've been getting more interested in looking at how people, consumers, look at these new cryptocurrencies, because especially at the beginning, after kind of the cypherpunks and all those guys started working in this space and looking at it from a cryptographic perspective and everything, the original adopters tended to be more on the kind of conservative end of the spectrum, which is really strange when you talk about new technology adoption. Usually it tends to be the more progressive types because they're more open to experience and all sorts of things like that. And so here we've got this technology that is kind of flying in the face of what we traditionally think about with product adoption or with technology adoption. So that was kind of where we started. And I've got a couple of projects looking at how people's kind of moral foundations look at adoption, and I'm working with some other people in the space in terms of advertising and promotion, and fighting some of the kind of FUD that goes along with these sorts of new technology spaces where not everybody's really sure. There's a lot of misinformation out there, and so part of this is fighting the FUD. A lot of it is just an interest in this really cool technology that uses some pretty basic human motivations to kind of protect itself and grow and get more adopted over time. So that's kind of where I was coming from. Then I watched your guys' video and said, well, a lot of this seems to have been solved, and that's what I was going to kind of talk to you about today, at least a little bit. I will preface this by saying this space is incredibly complex and incredibly new and incredibly interesting if you're into it. And I'm sure I'm going to say something that isn't exactly 100% accurate in the service of trying to communicate the general ideas here. There are a lot of people in the space who are way more knowledgeable than me on the specifics of, for example, the different technologies that underlie these different things we're going to talk about. But for the most part, I'm hoping that if this is interesting, that interesting in general, we'll give some resources, and we can maybe talk a little bit more about the technical aspects of it at another time, where I can point people to where those things are explained, because there's a lot of people in the space who are working really hard to communicate what this technology is, what is Bitcoin specifically, and the technology and the theory that underlies it. So
okay, thank you. Yeah, actually, just because when I first came across Bitcoin in 2012, I think, or something, I was like, this is the stupidest thing ever. What the hell? But it takes a while to wrap your head around it. Do you have any, for those out there who are like, I still don't understand cryptocurrency or Bitcoin, like, is there a relatively simple way of explaining it to them, or not?
Sure. I mean, the thing is that you go down the rabbit hole relatively quickly. The idea, at least from my perspective of Bitcoin, Bitcoin is the reward that miners get, whose job it is to kind of protect this network ledger that we generally kind of think of as the blockchain. And since the very first transaction back in 2009, because we've put all this energy and technology and effort into building these miners and creating this basically wall of energy that protects this network, we can be 100% sure that nobody has tampered with the ledger. And so what happens is these ASICs, these computers that are designed to do this one hashing function to look at the cryptographic solution to a set of transactions in a particular block, that has to be done by brute force. And so you've got to throw a lot of machines and a lot of energy at it. And then once somebody finds or proposes that a block has been found, that then goes out to the other part of the system, which are the nodes, which can very simply verify whether that particular cryptographic solution is correct. So you do a lot of really hard work to find the solution, but it's trivially easy to check the solution. So what does this mean? Well, from a lot of people's perspective in this space, if you have a ledger that allows you to know who has what coins on this network that is immutable and can't be changed, that's a much better solution for kind of measuring the amount of wealth that somebody has compared to dollars or pesos or some other things. Now, you can go way down the rabbit hole in terms of the Fed and all that sort of thing. We don't need to get into any of that. But in general, when you're talking about, for example, the United States dollar, which has added trillions of dollars over the last 3 years during the pandemic, and just printed that money out of thin air, then you would expect to see things like inflation because there's more units out there in the marketplace. And that's exactly what we saw. And so what Bitcoin proponents suggest is that because there will only ever be 21 million of these coins, the last ones to be mined in, I think, 2140, so 100 and some odd years from now, because that you cannot inflate the number of coins that are available, you have a very clear understanding of the worth of each of those coins and the worth of, and so you can then start to set exchanges for any good or service in the world in terms of these Bitcoins. And so the idea is that if you're willing to expend the energy, pay for the electricity to protect the network, you should be compensated in some way for it. And that's what the Bitcoins are. So every 10 minutes, a new block is found. There's like 6.25 Bitcoin that are awarded to the miner that finds it. And that just is then accrued into a wallet that can be spent or saved or whatever. So that's generally how it works, right? Technical details go way, way, way deeper than that. And in a lot of those areas, I'm not completely of 100% understanding a lot of, especially the cryptographic parts of it and things like that. But generally, that's what it is. The coins are the reward for protecting the network.
I'm thinking metaphorically, the way at least I wrap my head around it was like you're mining for gold and your dollars are based on the gold standard. So it's like you have a certain amount of minerals that are considered to have value. Now, but then of course there's the flexibility. Of course, as you dig more gold out of the ground, it becomes less valuable. As you don't have any more, that becomes more valuable. But to some extent, at least, I think that was what the initial idea for doing it, which was why it was called mining, because the idea was you were, metaphorically at least digging for some sort of valuable material. So
yeah, you find that that in this space, metaphor is used a lot to describe. We really don't have language that lines up well with what's actually going on. But mining is a perfectly good metaphor. The thing about the comparison with gold, though, is that gold is a big, heavy, stupid rock that doesn't really do anything. But I can walk around with 12 words in my head that represent the private key phrase or private key that represents all of my Bitcoin. So I could move from the United States to Russia or to Japan or to wherever I wanted to go, or if I was leaving a war-torn country or somewhere I was being oppressed, I don't need to take anything. I just need to memorize my 12 words. And so in terms of the kind of functions of money in a marketplace, Bitcoin is superior on pretty much everything except for, gold's been around forever, since the beginning of the universe, and Bitcoin's only been around for 12, 13 years.
Well, let's ask that question, because a big negative, at least for, you were talking about mainstream media, but a lot of people say this is incredibly energy intensive. It's terrible. You can't make this work. By 2100, we're going to be using 100% of the energy grid to do all this mining, blah, 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 blah. So what's your answer to that?
Yeah, so there's two answers to this. One is that, and I think this gets into difficulties with analyzing spaces that are moving very quickly, right? So from an academic perspective, if you're doing a review, it might take 2-3 years to get a paper through the review process. This is changing month to month. And so in a lot of cases, when you see statistics from 2, 3, 4, 5 years ago, they're meaningless now. Because they don't account for all of the new mining, all of the new builders, all of the new people who are out there exploring for the cheapest power that they can possibly get. So the latest data that we have is from a guy named Daniel Batt, who works in the space, and his recent analysis, which is literally like weeks old, is about 50% of all energy usage in the Bitcoin network is from renewables. So, and that's more than pretty much any other industry that you can think of, right? Obviously, oil and gas, building cars, whatever it happens to be. The kicker, though, is that his assessment is that it is getting 6.2% more renewable every year. And so over the next few years, we're expecting that the vast majority of the miners that are running mining nodes are running them off of renewable resources, for the simple fact that the energy that is generated from them is the cheapest that you can get. And at the margin, the miner has to be making more, has to be spending less in energy than they're making in Bitcoin, which is what's kind of cool about it. It's a purely economic marketplace. So if you can't find the cheapest energy that's out there, then you're not going to be profitable and you're going to have to shut down. And we actually see that in the energy markets, for example, in Texas, where you see that when power gets really expensive in the middle of the day, all the miners just shut off. And it's the only technology that we have that allows you to do that. You can't just spin up and down peaker plants and all the other sorts of kind of solutions that we have to these, peak rate issues. With a miner, you can. So you can build out as much infrastructure as you want, build it so that these machines are ripping all night long when everybody's asleep. And then as soon as the power gets too expensive, the software just shuts them down to almost completely off. All that energy goes and to stabilize the grid for air conditioning and those sorts of things. And then when the power price goes back down, they ramp back up. So it's a really beautifully efficient system. The other cool thing is, and this is the environmental scientist geek in me, there are numerous companies right now that have started building technologies that allow you to capture flared methane from landfills and run a generator, which then runs a mining a Bitcoin mine. And so what this does, and as you probably know, methane is like, I don't know, pick the number, it's 30 times to 80 times worse for the atmosphere than CO2.
Right.
And so when you convert it, when you burn it, then you are giving off some of the CO2, but you're also running this generator and building, getting something of value out of it, which you would never be able to monetize that methane gas in any other way, because frankly, landfills tend to be a long ways from where people are. So it's expensive to tie into the grid, it's expensive to sell the electricity, and you don't get much. So there's a lot of these industries where just that little bit of profitability that you can make from running a mine on a stranded asset makes mitigation possible, makes it financially viable to actually go and attack these sources of methane. Oil and gas venting, same thing. You just put a cap over the top of it, stick a miner on it, and make money while you're getting rid of that methane. So it's an incredibly cool and interesting field to be in right now.
Okay, but I have a question about the compensation model. So I imagine there must be millions of miners out there.
Something like that, yeah.
Okay, and each of them has to pay the bills.
Yeah.
And every 10 minutes, someone wins that lottery.
Yeah.
I'm sitting there thinking, well, how often will, what's my chances of getting it? Seems to be pretty small if I decide to enter the space tomorrow, which means you probably going to see a lot of them just shutting down or going bankrupt. And then eventually you get a consolidation of these giants that take over. And then the concern that they're going to be the ones that are be able to run it. And if anyone is more than 50%, potentially they could be tricking the system.
Sure. There's a beautifully elegant solution that's been proposed, or not proposed, but that's actually that exists, and it's called mining pools. And so what happens is that if you're a little miner, it doesn't make a lot of economic sense for you to plug your one little miner into the wall and hope that you get that 6.25 Bitcoin reward, because the likelihood is minuscule, right? So what people do is they take their individual miners and they point them at a pool. And this is not a centralized controlled thing. It's just a pool of aggregate hash power, of aggregate miners, that you are compensated for the amount of hash that you're contributing to the pool. So if you have one little miner that's running in the corner of your house, maybe heating up your garage or something like that, which is what other people are doing, they're taking old miners and converting them into little standalone heaters that generate enough energy or enough money to kind of pay for the electricity. Then you would just point at this pool. And so can I share a picture real quick?
Yeah, let me turn on my screen share.
Yeah, that brings up another point is like, the big miners could be plugged into like district heating somewhere.
Yeah.
Or maybe someone would be really smart and say, you know what? We have a bit mining space heater. That's it.
Right.
Yeah. So, I mean, there is always use for waste heat.
Yeah.
Yes.
So long as you use it in heat, it's not really hurting the grid at that point. If you need electricity, your stove, for all intents and purposes, could end up doing bit mining.
Absolutely could.
Mining stove. I love it.
I have friends that they heat their water, they heat their hot tubs, they heat their swimming pools, they cure wood for wine barrels, all sorts of different. Can I share real quick?
Yep, you can do that. Yeah, and just while you're doing that, I'll share an anecdote, because I started Bitcoin mining in 2013, and we got a Bitcoin miner, and of course just one, and we were able to plug into a pool, and that's how we did it. They just give you a percentage when they get when they solve the problem, however much percentage you gave, that gives you that fractional amount of Bitcoin that you would receive. So yeah, there you go.
Yeah, if you're looking here, so this is the Brains pool. There's a bunch of these pools that are out there. There are two on this example. There are 2 miners that are running out of 3. And if you look at the image here, down here, each of these little diamonds is where the pool found a Bitcoin, or I'm sorry, solved a block, found a block. Right. And so then that is just distributed. So if you look down here, this day is $1.46 in USD. And if you've got cheap enough power and older machines, that's probably about break even. Now, there's other reasons to run these, for heat and all the other sorts of things. I run them just for learning about how all of this stuff works. It's one of those things where the best way to figure this all out is just to do it. And then what they do is that the pool will take a tiny little percentage off of each of the block rewards, put that in their wallet, and then distribute all the rest of it. So that's a big way of keeping anybody from consolidating too much. The other thing is that if you look at the distribution of miners and hash rate around the world, it's everywhere, right? China hashes a ton. The United States does. Texas is one of the leaders. And then all over Europe, all over Asia, everywhere. And so the likelihood that somebody would be able to ever accrue 50% of the hash rate to try to control, and it's not even control the ledger, it's like it would be an attempt to try to rewrite a recent block. It would be so difficult because in the open market, we would see some actor out there accumulating thousands and thousands and thousands of these miners to try to do it. And so there's all sorts of reasons why it would be very, very difficult to manage to get that much hash rate. The cool thing about a pool is that if the people that are running the pool do anything untoward, increase fees, try to consolidate, ask you to do something, you just point your miners at a different pool. So you don't have to stay there. You can go anywhere. And that Bitcoin just stays with you in your wallet rather than with the mining pool. So yeah, there are ways, and these solutions have allowed us to kind of not worry so much about the 51% attack. So
I think we just saw the value change.
Yeah, it did.
Bitcoin.
Yeah, it went down to 14.85 terahash per second. Oh yeah, you're right.
No, down there it was like 47 before. Now it's
no, but I think it's because he just got a little bit more Bitcoin, so it actually increased.
Yeah, exactly. So
yeah, there you go, Scott, right there. See right there in the corner, that's a new block we just found.
That's a new one. Okay, so you get a piece of it. So that pool actually got a piece. Oh, there you go.
It looks like right now at these prices, it's about 50 cents per block found for me. And if you look down here, here's the full pool statistics. There's 8,400 people in the pool, with 68,000 miners at 5.9 exahash per second.
Jeez.
So that is a lot of compute. Yeah, Scott, I can see Scott's jaw hitting the floor. It's a lot of compute. And again, if you wanted to try to control this thing or do anything, you are fighting that. I mean, you are fighting a worldwide decentralized network. And the other thing is a lot of the hash that is working around the world are behind energy producers. They might be directly connected into hydropower in Japan or in China or something like that.
Right.
You may not even see all of the miners that are out there.
Okay. So let's actually, we can stop sharing for a second if you don't mind. But this actually goes, like we've taken a long circuitous route, but we've gotten back to the sort of idea of xCoin and stuff. Because one of the things that Scott and I talked about, and again, it might be a little bit naive with the whole thing, but wrong. Yeah, fine. But the idea was that it was just the transaction costs were too high for Bitcoin specifically to be able to utilize it on a daily basis as cash. In other words, good for a savings account, not good for a checking account, more or less metaphorically. I think you'll have to stop. I think Andrew, you'll have to stop sharing the screen. Oops,
that stopped.
That was the thing, John. Remember, I gave you like $3 or something like that to subscribe, and then you end up seeing maybe $1 of that or something like that. There was just so much. So that's like, wait a minute, that's not the way to do it.
Right.
Okay, so again, then this was one of the funnest parts of listening to your discussion. This has been solved. Now, it is true that on the base layer, on the Bitcoin network layer, it's too expensive and too slow to do small transactions between people. And so what developers have done is they've built what's called the Lightning Network on top of Bitcoin. And what the Lightning Network allows you to do is it allows you to send Bitcoin between people anywhere in the world via this network of basically it's an onion-based network, right? So it's hops along along the network based on 16,000 different nodes that are running right now that we can see. There's a lot more that are on the Tor network and that are private and things like that. But what that allows you to do is it allows you to send tiny, tiny bits of Bitcoin for fractions of a fraction of a penny. And so and it's completely frictionless. So what you would do is you would have a wallet that's connected to the internet or your phone or whatever it is. And via the Lightning Network, I can scan a QR code if it's at a restaurant. I can have your address in my thing, and I can just send you Bitcoin. Now, some of the listeners may not know this, but a Bitcoin is $30,000 ish right now, 29 change. But a Bitcoin comprises 100 million Satoshis. We call them Satoshis because Satoshi Nakamoto is the guy that invented or that discovered Bitcoin, depending on your perspective.
We all know it's actually Elon Musk.
Yeah. He'd already be, if it was, he'd already be on Mars.
Yeah, that's true. He'd have a lot of money.
Yeah. And then within the Lightning Network itself, there are millisatoshis. And we're talking about fractions of 100 millionth of a Bitcoin. And so anybody can run a Lightning network, or I'm sorry, a Lightning node. In fact, there are wonderful software packages. One of them is Umbrel that runs on a Pi with a relatively small hard drive. I think the one that I'm running is a I think it's just a 3 gig. I'm sorry, 3. I can't remember what it is. No, it's got to be 3 terabyte or something like that. But the entire network, the entire Bitcoin ledger is only, I think, 500 and some odd gigs. So it's still relatively small. And the blocks are super tiny and are not going to get any bigger in order to keep the price of actually having a full node, because that's kind of the point, is that all of these nodes around the world have their own copies of the ledger, so it can't be corrupted. So with a Lightning on top of that,
so that's Bitcoin is only 500 gigs? I thought it was substantially larger than that. Okay.
Wow. It may be up to 600-ish now. I haven't looked at it.
But recently. Still, I mean, we're talking about easily put on a personal hard drive, not anything
of course,
you have to have a data center for. Yeah. Okay.
Yeah. Yeah. So it takes when you set your initial node up, it takes a couple of days sometimes for it to fully sync, because it's got to go out and make sure that everything's correct. Once it does that, it just runs in the background. You don't even notice it. And then on each of the nodes, you've also got a wallet that's associated with the node. And so there's these wonderfully simple ways of kind of knowing where your Bitcoin is and sending things around. It's not perfect yet, but there's a lot of really smart people working on this. So for Lightning, you would have a wallet. I can scan a QR code. I can send it directly to an address. I can send it directly to a public key. And I can do that all with fractions. Now, what's cool is what you should do is you should think about the Lightning Network as an abacus between everybody in the network. And so let's just say I've got a channel opened to John, and each of us put, I don't know, 1 million Satoshis, so 1/100th of a Bitcoin into it. That essentially acts as liquidity that we just slide back and forth between each other. So if I'm getting a request from somebody that they're sending 50,000 Satoshis to somebody else, I send 50,000 to John. John sends 50,000 to whoever's next in the line. Blah blah blah, and it just bops along. And each of those hops, you're taking a tiny percentage. Tiny, set of I think that I checked today, it was 860 millisatoshis or something like that.
Wow.
So it's relatively, it's almost imperceptibly cheap. It's just
but if there's enough transactions, then you become like Richard Pryor in Superman 3. Remember he was rounding up the pennies?
Yes.
Right. Yes. I remember that now.
Yeah. It's going to take a lot of transactions. And the neat thing is that nobody can see more than one hop in any direction, even if you wanted to figure that out. So it helps also with just anonymity and security and things like that. If you're doing transactions on the base layer, on the Bitcoin layer, you do see all of the transactions. They're anonymous, but they're not hidden, right? So, and there are companies out there who have tried to figure out ways that they can attach names and things to particular wallets and stuff. And there's a whole discussion to be had about security and what to do about that. But for the Lightning Network, where a lot of people are going to be doing most of their transactions, it's an absolute game changer, because the amount for each of those individuals on either side of the Lightning channel, they don't settle to the Bitcoin blockchain until both of them close the channel. So I could have an open Lightning channel between me and 5 or 10 other people, or one big Lightning channel that has a lot of people connected to it who acts kind of as a central node. I could leave that
just
open.
a poker game.
Yeah, it is a poker game. Yeah, exactly.
Yeah. And nobody can identify what's going where and with who until, and not even after you settle, because I could have done 1 million transactions between opening the channel and closing the channel, and all you would see is the opening amount and the closing amount.
Right.
Okay. So that means in the future, all ransoms and money laundering will be done in millisatoshis.
Yeah. Yeah. Wait. Actually, also, what happens in Lightning stays in Lightning. We have Vegas to the ultimate extreme here. It's like and the way. Sorry, just real quick. The way that the transaction costs are kept relatively light here is that Lightning only goes back to Bitcoin once in a while with bigger blocks of transactions. It's not like every one of those little Satoshis is being accounted for until there's a big block of transactions, and they just do that all at once, which is more reasonable.
Again, it's like the casino that all this money is changing hands around there, but it's only when we finally cash out. Now the casino has to report my earnings to the IRS. It doesn't know I get it from you, or that I get it from Andrew, or I get it from anyone else. All that, like you say, stays at the poker table. All they care is about the transaction at the end. I think a question for you, Andrew, is that not an expert at it, but then someone told me, it's like, oh, on TikTok, you can tip someone a penny. And I'm like, really? You can? Yeah. How is that done? Is it done a similar way?
Yeah, let me share another screen here real quick, because this is definitely one of those pictures worth 1,000 words. Okay, so can you guys see that?
Yep.
Yes.
Okay, so there's a third component to this, and this gets into some pretty deep ideas about what x/Twitter could be in the future, and whether open source is going to beat closed source and things like that. Right. So we've got the Bitcoin base layer. We've got Lightning on top of that, and then a few developers have worked and created basically a social communication open source communication network called Nostr. And Nostr allows you to send messages cryptographically back and forth between users. And so the very first thing that a bunch of guys created was basically a Twitter that kind of a Twitter-like app and an ecosystem that lays on top of Nostr. Now, Nostr is just a protocol. It's open source. You could plug Twitter into it in a couple of days. It'd be easy to do.
Wow.
And so, but what it allows you to do is it allows you via the Nostr protocol to send around our tips. So if you look here, this picture that I've got my cursor on the side, there's this guy, Odell, he's posted something that I want to support, that I like, I find funny, or whatever it is. I have a Lightning wallet that's connected to my app. It's got, I don't know, 2,000 Satoshis in it, 2,500 Satoshis, doesn't matter, a few cents worth of Satoshis. And I can say, oh, okay, look, I want to send 50 sats to Odell. And so I click this button right here. These are just screen caps. I click this button right here. This window pops up. You choose the amount you want to send, and you zap it to them. We call it, they're calling it zapping. And that's all done over Lightning. So in the ecosystem on Nostr, I can send zaps to each other. If I get a 2,000 sat zap, I can then send it on to somebody else because they could create something cool. And all of that stays off of the base layer. It all is on Lightning. And so you would likely, for most of this value transfer, you would likely never see it hit the base chain, because these channels are just going to stay open. I can then take those Satoshis out of my wallet and I can sell them on exchange. Right now, that gets to the long discussion you guys had about capital gains. There are, I think, 8 countries right now that do not that don't charge or don't ask for capital gains when doing crypto exchanges, which in that case includes Bitcoin. And my guess is that probably with the way that our government is looking at Bitcoin versus the rest of crypto, I don't want to say it's imminent, but my guess is that at some point Bitcoin is just going to be treated as a commodity / unit of account / money, and it would just be like, since it's completely fungible, you don't pay capital gains on that sort of thing. And so it's I don't want to say it's likely soon, but I can't see a situation where many other countries, including Switzerland right now, aren't charging capital gains on increases in the value of crypto, and we don't. It's just a matter of time. So when that happens,
there's kind of two aspects to the gain. There's like a wealth tax and a capital gains tax. So as long as you're holding on to it and don't convert it or sell it, there will be absolutely no taxation.
Right.
Which is different from like a wealth tax, which could be a concern that a lot of companies. Well, we even hear it with some senators here.
Right.
The idea is that if your net worth goes up, they want to have a tax on your unrealized gains as opposed to your realized gains. So is that going to be a problem with the crypto? Is that if my Bitcoin doubles or triples, that suddenly they're going to say, no, we're going to tax that? Or is that only when I convert that into US dollars?
Okay, so you are getting into a deep philosophical space in this. If Bitcoin goes to 300 or 500 or a million a coin, everybody is going to want to acquire it as quickly as possible. And so they will exchange their dollars for Bitcoin, and they will hold that Bitcoin forever, right? So it's very unlikely that there's going to be a capital gains sale at any point in the future, because just like the extremely wealthy in New York or in LA do, they don't sell assets. They take out loans against that collateral with the expectation that my block of Manhattan real estate is going to continue to go up forever. And so in that case, most people would probably just take out a loan against their Bitcoin for their kind of day-to-day expenses and never have a capital gains thing. With companies, it's a little different, and I'm getting out of my depth here because this gets into kind of general accounting practices and things like that. But there are a number of companies, MicroStrategy is one of them, obviously Tesla's another one, that kind of behind the scenes are working to fix the problem with having Bitcoin on your balance sheet, right? Because you have to, even if you don't sell it, you have to realize a loss if it goes down in price. And so there's a lot of little accounting things, and kind of like how are we going to classify this asset that I believe is going to change relatively soon over the next few years, to make it so that you're not incurring capital gains when you buy or sell Bitcoin. But for the most part, I think that most people are just going to live on the Lightning Network for their day-to-day transactions and never sell their Bitcoin, right? It's economically not rational to do. If this asset is going to, eventually be worth the amount that gold is, that it's eventually going to be worth, pick some of the wilder ideas, all of real estate, right? Because really what you're doing when you're looking at the price of Bitcoin, you are looking at the price of Bitcoin in relation to some other thing, right?
Right.
So, and if you look, I've got a picture of a couple of assets of Doge actually here, and it's basically gone to zero against Bitcoin. And the reason is because any rational actor would want the most fungible, solid, part of the network or part of the ledger that they can possibly get. And so they're going to be willing to change their inflating dollars into Bitcoin and just hold on to the Bitcoin. And so that's, and that was kind of one of the big things about your discussion, and about, how, and by the way, I'm a gigantic Tesla fan, own 2 of them, love the company, love Elon, the whole thing. But every time we see these things happen, the closed system gets outperformed by the open system. And with Bitcoin, Lightning, and Nostr already there, and with the rational thing to do is to, transact on the Lightning Network and hold on to your Bitcoin, then I don't see where there's a lot of space for X to build another system on top of that. I was kind of chatting at John in the thing when I was watching the video. Any company could do it, right? You could use Dogecoin or whatever it is, but the first thing somebody's going to do is write a plugin that just on the fly converts Doge into
Yes.
whatever. There's a really interesting company called Strike that a guy named Jack Mahler's designed or created over the last few years. And what that allows you to do is it allows you to take your bank account and put some dollars into it. And let's say my family lives in Colombia or Brazil or something like that, and I want to send them dollars. Well, it's really expensive to do via Western Union. There are countries in Central America where there are gangs that just take 10%, so you don't get beat up when you go to pick up your money, whatever it is. What he's done is he's created a way for you to take cash in your app, convert it into Bitcoin, essentially send it to the recipient, and from Bitcoin convert it back into the local currency. And so it happens so quickly that there's not a capital gains, right? The price doesn't really change. It might be a cent or two or whatever it happens to be.
Right.
And so he's got that running in multiple, it's here in the United States, obviously, and he's got that running in multiple countries around the world where you can just send by converting your any currency that you're in to Bitcoin, then Bitcoin to that currency for that individual.
So there's no derivative then. There's no derivative market.
Yeah.
It's because it's instantaneous.
Yeah.
Yeah. Can you go back to the screen you had with Odell? I got a question about that.
Hold on a second.
The other thing I want to ask about, and I don't want to forget this, but we can table it for a second, but I definitely want to talk about an economy based on this, because the ultimate thing is that money is only useful as an exchange for stuff. So anyway, but yeah, Scott, ask your question first. And
then So Mike, so if I understand it, you've got a lot of different tip modes here, and that you will kind of get in your head that 50 Satoshis is like maybe worth 1 penny or a fraction of a penny or something like that. And so depending on how much you like it. But the question I have is if Odell posts something that I can't unsee, is there a thumbs down where he owes me 1,000 Satoshis or not?
Yeah, so this gets to something really interesting with Twitter specifically, and with social media networks in general. And this is not my idea. This is an idea that a lot of people have come up with, and it started way back in the mid 90s, early 2000s, with some of the cypherpunks trying to figure out how to deal with spam. And basically, and some of the early precursors to Bitcoin were this idea that you would attach some proof of work, a little bit of CPU processing or whatever, to every email that you sent out. If you're sending 10 or 15 emails a day, it's a negligible cost. If you're sending millions, it's going to cost you money. And so what the proposal is something like I would post 10,000 or 100,000 Satoshis. That's about $30 right now. I would post that into a wallet on my Twitter account. And that is my verification that I am who I am based on the money that I've placed there. Now, the cool thing is I could be completely anonymous, right? Because I don't have to tell you who I am, or I don't have to do any KYC or anything like that. It's just by posting that money, I would be verified. So the cool thing with that is that then I can use that money as my verification, but I could also be punished by Twitter or by community notes or whatever it is, where that money might get frozen for 24 hours. If I do something bad, or if I post something spammy or post something offensive. So there's all kinds of, you can kind of let your mind wander about how this could work. Let's say I'm somebody from a completely oppressed country without $30. Well, I could also put 2,000 Satoshis in my wallet, and I could send a tweet to, say, a verified user and say, hey, I'm adding 2,000 Satoshis to this to verify that I'm actually a person, not a bot, and that I need to get this message out, or I need to communicate with you. On the other hand, you could also do this. If let's say, we're all verified users on X, Twitter, I could have a setting that says only verified users can tweet at me for free. Otherwise, you pay 2,000 Satoshis, and I could just have a slider for how much it meant. So if I'm somebody super important, then I could say, you're not going to tweet at me unless you send me 1 million Satoshis or 100,000 Satoshis or whatever. So if I've got something really important to tell you, then I'm willing to spend that, and I'm willing to spend that money to do so, then that would get through my filter. But if I'm just and I'm lucky that I don't have the spam and the junk that's in my Twitter feeds that I know a lot of you all do, that would instantly go away, because nobody is going to spend 1,000 Satoshis or 10,000 or 100,000 or 1,000,000 Satoshis to send you a random picture of something that's offensive or a crypto scam or whatever it happens to be. And so
so that means in your reply overall. So that means that you just don't see it, or absolutely nobody sees it. He cannot even reply to your post, which I think is what they're called now.
Yeah.
And so no one sees it unless that person really wants to spend that amount.
Exactly.
Right.
Yeah, and again, we can have all kinds of settings for this.
Right.
But at the same time, if your posts are uninteresting, and like no one's like, I'm not going to buy, you're not going to get traction either. So there's going to have to be that equilibrium that you've got to come up with something that people are going to want to interact with.
Well, you would see that in the zaps that you got, right? You would see that in the tips that you got. If nobody's tipping your post, nobody thinks it's interesting. And so so that would be a way to, I mean, it would essentially be a retweet with value, right? Yeah. It's really easy for us to mash the retweet button. It takes a little bit more effort for us to do a quote.
It's repost now. It's repost. I think.
Yeah. We got to get used to all the new stuff.
I know.
But, okay. That's really interesting.
Yeah.
I do like the idea of making it a small enough amount that individuals, hopefully in regionally or whatever, will be able to do that if they want, but that it would be prohibitive to send out 1 million of them as a spammer.
Could be the other way around, because my understanding of the way that spam was going to work is like a postage stamp, in which the price of a stamp was like a fraction of a penny.
Yeah.
So for most people with their normal kind of email, they would use up very little of those things. And then when they receive an email, they actually get money for every email that they receive. So like within your friends and everything, it'd be transactional. But if the spammers are hitting you, they basically have to pay you for you receiving that thing. So that was the idea, is if you're getting way more spam than you're going out, you're actually making money to receive that.
Yeah.
And so
there's another,
you could almost see people out there. It's like, okay, I'm willing to have the spammers just spam me all day. I don't care. Just bring it on in.
Right. And so, but the thing is those Satoshis from that spammer would be transferred to you.
Yeah.
I mean, obviously, and all of a sudden I've got more economic value just from sitting there, and they have less.
Right.
I mean, you could set up, I mean, there's all kinds of insane things you could do. You could set up accounts that just allow these people to send you stuff. But the thing is it's just not economically viable. A spammer doesn't have unlimited amounts of money.
Jeez, it's reverse spam. I mean, you're going to have people just setting up these shops just to receive the spam, not to send it anymore. I can just see it now.
So there's also a movement in that. So Lightning obviously allows you to do some really incredible things. And again, this gets at Scott's point of the friction. It removes the friction from the system of moving value around.
Right.
There's the value for value movement, which do you guys remember Adam Curry from MTV back in the day?
Yeah.
He was one of the original VJs. He's now a huge privacy libertarian proponent, and he's got a very popular podcast. And he's been at the forefront of this movement called the value for value movement. And the idea here, and this gets at the discussion you guys were having about Spotify and Netflix and things, where you stream Satoshis to the content provider during the podcast. Now, that's all great. So like if John's doing a video and it's an hour long, I might have it set to send 10 Satoshis every minute or something like that. And then you aggregate it across tens of thousands of people who watch it, and all of a sudden there's some money there. But what's really cool is that if you want, you can reverse that. So let's just say I have some presentation that I would like to be able to give to CEOs of some product area or something like that. And it's not an audience that's difficult to get at, whose time is valuable. Right. I could send out a thing to them and say, hey, click this link. I'm doing a 30-minute presentation on blah, blah, blah. And I will send you $100 worth of Satoshis for your time.
Right. And
so you could go back and forth. And of course, as you think these things through, you could come up with all kinds of new ideas for how this might work. But I fully believe that the streaming thing, because you guys were talking about the problem with, if I subscribe to you and you subscribe to me, then we're net 60 cents off on each of those, right? That doesn't make any sense.
Right.
And what I should be able to do is I should just be able to set up a channel, essentially, with you, so that anytime anytime John's content shows up in my feed and I click on it, it just automatically starts streaming Satoshis. right? And maybe we set it up some way that Twitter or that X gets 5% or 3% or whatever it is.
Right.
But
Right.
the thing is, with the Nostr open protocol, it's all free anyway. And so, where are the economic incentives? Do I want to continue to pay X a little percentage of my revenue? Because, if they charge me 3%, maybe. If it's YouTube, they're charging 40% or 30%, or if it's Spotify, which is just is atrocious in terms of artists. Man, you're going to move to the protocol and the platform that pays you the most for the value that you create.
Right.
Yeah, I think they make their money on the velocity of money, because your transactions right now are very slow. They're not very often because there's so much friction. No one wants to do it. So that's why they grab so much from it.
Yeah.
But I mean, a supermarket doesn't make a whole lot of money. If you look at it from a profit standpoint, they make the money in the fact that that product is like just moving through the store like crazy. So again, if you have one of those things that there's a lot of velocity of money going on within X, these transactions happening so much per day that they end up eclipsing being 10, 20, 100 times more than what it normally would be in a normal day. They can take a much smaller transaction fee to the point that you don't even notice it.
Yep.
And then that speeds up the velocity even more and more. And so again, I don't think we want to call it the poker table anymore. I think we want to call it the Joker table. So we have all these people sitting around with piles of chips, and we're telling jokes. And when someone likes a joke that someone said, you throw them a chip. And then someone else sells one and it comes back. And you just keep on these chips are just going around while we just sit here wisecracking the whole time. Yeah. And so that's the idea. It's frictionless, and you either like it or you don't. If you're insulted by the joke, you don't, say, hey, no, that was at my expense. So literally it's at your expense. So you give it to me.
Yeah. This also gets back to, you guys were talking about the medical billing and things like that. A lot of those problems go away with this system as well, because if we're working in Satoshis and in Bitcoin, then all of a sudden my transfer of my value to you as the clinic or the family medicine or whatever it is instantaneous. I walk in with my phone, I hit the QR code, the Lightning channel is there, you get those Satoshis immediately, they go into your wallet, and then you do whatever you want with them. So there's no paperwork. There's none of this sort of stuff. And then the cool thing is these transactions have a hash or have a set of public addresses on them. And so you can record and you can track them based on the public address, which means if I want to say, maybe get a medical procedure done that's not legal in my state, and I go next to the state next door to have it done, I could do that anonymously and nobody would ever know, because all I would have is my key. It's my public key, unless you really wanted to try to figure it out.
And again, going back to the silly medical expenses, I just had the problem again, is that I paid a bill on my HSA account way back in April. So it was for a service that was in March, and it went out, and I keep on getting these bills of saying, oh, it hasn't been paid, it hasn't been paid. So that they sent me several, and now I didn't realize, because I haven't bothered mailing in a while, first class stamp is like 65 cents now or something. Yeah, did you know that? I was still thinking it was like, oh, it's 49 cents, isn't it? So is that, and the expense of them printing it, they keep on sending it to me, and I'm looking in there, it's like, this was paid back in April. And then I'm looking, it's like, oh, the check was sent, but they lost the check. They lost it. And now they're coming after, and now they were threatening the collection agency and everything else. And I've got it right here. It says I paid it. You bozos actually lost the check. So they keep on sending me this stuff. So now, I had to recut it and send everything out over what is like a $20 bill. Yeah. So I'm just looking at how much did they lose in that collection.
On Lightning, I can verify it. It's in my wallet, instantly.
Yeah, and it's done instantly. Yeah. And again, the problem is the transaction is that they are working on that 30-day window. So they send something out to you, you get it, you turn it around, and it still takes a week or two before it shows up. Meanwhile, as far as they're concerned, you're still late because you didn't pay within that 30-day. They send the next one out, not realizing the checks are really crossing each other in the mail. Again, that's just costing the money. That's one of those things I would have rooted out 4 decades ago. It's just so obvious that that's an unnecessary expense, and why is it still there?
Let's remember, I think Elon talks about this all the time, but that money is a bunch of mainframes running COBOL, which have internal ledgers, but then they have all of this friction when they transfer information back and forth between them. The beauty of something like Bitcoin is that it's one ledger. It's just one giant ledger that keeps track of everything. And so it's examinable. You can open the books. If you try to go to Bank of America and say, I want to see like the transactions that your bank has done in the past couple of weeks, all of they're going to be like, hell no. That's our proprietary information. The beauty of, and it's not easy to look at. I looked at the ledger and I was like, oh, that's great. That's just a bunch of characters. I have no idea. But smart people at least can look at the ledger and figure out what's happened, and they can determine whether it's accurate or not too. So that's the beauty of this.
We're talking about a decentralized ledger that is protected by 500 exahash per second.
Yeah.
By tens of thousands of nodes and hundreds of thousands, if not millions of miners around the world. And it is incorruptible and can't be messed with. And it's like, so when you look at it from that perspective, what's the point of a Visa or MasterCard charging me 3% when I can just send you whatever money you need over the Lightning Network?
Right.
What happens to an economy when you immediately take 3% of the overhead out of every single transaction?
Right.
What happens when you take?
Yeah, well, where's my cashback going to come from?
Right. Yeah.
Where's my cashback going to come
I want
from?
my cash
My
back.
Bitcoin card, it better give me cash back.
Well, unfortunately there were a lot of companies during the last bull market that tried to do that had credit cards that would give you rewards in Bitcoin. And so and what ended up happening, and I'm sure you all kind of know what the pattern over the last, since like I think November 2021 was a peak of about 69,000.
Right.
Come to find out that a lot of those companies that were buying and selling Bitcoin were just buying and selling paper Bitcoin. And so, and so they're leveraging, 10x whatever on the Bitcoin that they actually own, and then using it to pay for other things. And it was a whole mess. There's a new book out on Sam Bankman-Fried or whatever his name is.
Yeah.
And some.
Did you see he just got caught again for like he did another coin from his parents' basement? He's in house arrest.
Yeah.
Like, dude, stop. Just stop.
Really?
And that's, I think, one of the reasons why I talk about crypto as a different thing from Bitcoin, because it looks to pretty much everybody who's an expert in this space, except for those who have a vested interest in these alternative coins, that they're all securities. They were all pre-mined. They were given away to insiders at the beginning and then sold on the open market. And we have very clear laws about securities and how you deal with them and how you do them. And what we're starting to see is there was somebody today, and I can't remember his name, who's just been indicted for his coins, where he was taking money from people who had invested in the coins and then going and buying stuff with it, Ferraris and Gucci bags and stuff like that. And when you look at nearly all of these 22,000 different coins or whatever they are, they're almost all securities. And so it's just like owning a stock in Tesla or anything like that. And where there's ways to report it, and there's ways that you value it, and there's ways that you can buy and sell it. And one of the big 800-pound gorillas in the room is that the exchanges where a lot of these coins are being bought and sold, they're not registered. Right?
Oh,
and so,
wow.
There's because there's been no discovery. There's no reporting on who within, for example, the Ethereum Foundation owns what, or who's been sold what and at what price, right? All those sorts of disclosures you have to do when you register a security with the SEC. None of these coins have done. And so the SEC is going person by person by person going, hey, you launched this coin, and Coinbase is sitting out there with hundreds of these things on their books and have been buying and selling them for years now, likely illegally. So it's not clear, and I am no expert in this space, but just at least from the reading of the tea leaves that I see, is there's going to be a lot of these sorts of lawsuits against some of these foundations and things like that that created some of these. Bitcoin doesn't have a foundation. It doesn't have it has somebody who discovered it and launched it and disappeared.
Yeah.
Right?
We've talked about this. We've talked about this for a long time, but before we go, because Elon has talked about the Everything app and everything, and obviously something like this is necessary, whether he uses Bitcoin and Lightning or not. But the whole idea of exchange and all of this stuff, and people thinking how many dollars this thing is worth, is a little bit nonsensical. It's like learning a foreign language. I remember learning French, and everything I would translate back to English all the time. And then at some point it was like click in my head, and I was like, oh, I'll just think in French. It's so much easier. So I'm thinking about economically the same thing. Instead of going like, well, Bitcoin is worth this many dollars, it's like, no, what can you buy with this Bitcoin? I mean, that's the ultimate value of money anyway. So what do you see for the sort of the economy? Like where could you see something like X or something like that start to generate not just people throwing chips at each other at a poker table, but actually, I don't know, this scotch tape or something, whatever. You could go to the store, or you can do, I know that already exists in a small extent, but like, how could you see that becoming significant, like a big sized economy?
Yeah, if you could answer that question, you'd own a couple of islands somewhere. Now, I
No,
will.
I think I can partially answer it. I think it's just a service based. I mean, we have a service based economy,
Yeah.
which doesn't actually have to produce anything physical in
Right.
that sense. So if there are people that are willing to do services for me, and it could be like helping to edit a video, so that's going to be the first place. You're going to have all the creators that say, "Hey, I need a good video editor. We'll do something like that," and so that's going to create a little economy. Then I think it starts to branch out, that you get more and more things like that, where people are willing to do other services like that that don't actually require me to say physically go out and buy material and machine it and turn it into some other form. I mean, that will then be a little bit different when I have to interact with the economy outside of it, where I'm now going to have to take that Bitcoin or Satoshi or whatever and actually use it to go down to the store to buy something that, if I'm doing 3D printing, it might be a little bit different. Now I'll have a consumable I have to purchase. But if it's really doing something like editing or script editing or writing something for someone or doing some art, especially digital art that just requires your computer, it's not going to require anything else.
Right.
A little bit of electricity, but that's not a big deal. So I think it starts there.
Yeah, I mean, it already has. It already is starting there. The real question is at what point do people, economies, want Bitcoin more than they want the currency? So, for example, in Turkey and in some of the other countries where there's just massive inflation, there's a lot more adoption of Bitcoin and crypto in those places, because as their dollar inflates away its value relative to that dollar, the crypto gets more and more valuable. Now, we live in a relatively privileged country with a relatively stable dollar that is inflating, but is not nearly as bad as some other countries. What happens when that inflation takes off again? What happens when we add another few trillion for the next reason that we do it? And at what point do people just say, I'd rather just have the Bitcoin, and I'd rather just transact on the Lightning Network, and I'm willing to give you more of my US dollars for less Bitcoin, right? And that's where we start to see this thing take off, because when Amazon allows you to send them Satoshis to have them ship you a product, right? When I can pay Rite Aid for my prescriptions, when I can do all of that stuff, because all of these businesses are going to see that a lot of their costs are the friction of the monetary system that we're in. And so as that friction goes down and down and down, I'm going to I would expect that those savings are going to be passed on to consumers in the same way that we're just talking about the 3% hit with Visa MasterCard. I was actually working on an idea for campus where on campus we would use Bitcoin and Lightning, and then each of the retailers here would just get a 3%. You'd save 3% by not using Visa and using Satoshis and using Bitcoin. And so and then the cool thing is you could split up that 3%, and I could say, okay, that 3% is going to be 1% goes into your savings account for your Bitcoin, and the other 2% goes to the retailer or whatever, right? There's all kinds of cool little things you could do with that. But I guess the biggest thing is that removing the friction from this system, from the monetary system, has the potential to completely change everything. I mean, and I think a lot of people that are excited about this space and that work in this space and are working so hard for this thing to happen, think that that's the key, right? And you can go all the way off into the kind of libertarian world where it's like, the central bank is the enemy of everybody, and taxation is theft, and all this sort of stuff. But really, just pulling that friction out of the system. I mean, just in our little example now, if Twitter goes to 1 billion users and they're all running around on Lightning, zapping each other and buying people's products and services, I mean, what is that going to do to the price of Bitcoin? And as the price goes up relative to dollars in your marketplace, then people are going to want it more. I mean, it's basic economics. And so it should be this kind of, nice feedback loop of driving the price of this thing relative to everything else, or said differently, the price of everything else relative to Bitcoin should be driven to zero, to the point where it just becomes the medium of exchange, the store of value, and the monetary fluid that we use just to make things happen.
Right.
Yeah, I guess the other way to look at it is why are merchants willing to accept credit cards over cash? What was the reason for that? And that is that there was already a certain amount of friction even when it came to cash. So first of all, you needed a cashier who had to calculate correctly and give the change. Oh, you have to have the change drawer. You have to make sure there's enough to be able to do that. Then at the end of the day, you've got to count that up. So you're paying the cashier minimum wage, whatever, for each hour. So that's already a little bit you're taking off of that. You got to count that up. And then you got to take it to the bank. And depending on how much you have it there, you have to hire a security guard or Brinks to come and do that. When you get to the bank, well, the bank is not going to actually accept the deposit for free because you're a business. So you have to pay for the fact you put in there. So by the time you're done, that $100 bill that you may have collected may actually, you only see maybe $95 or $96 of it. A lot of it has kind of evaporated along the way. That's why the merchants say, no, I'd rather go with a credit card because I don't have to worry about all these other issues. It makes up for it. So when you start to show them that you've got something that's even lower friction than that, it becomes a little bit better. And then I guess the other thing, the question of like, when do people start accepting Bitcoin? You can probably look at like a little historical examples of when certain different currencies ruled. I mean, it was like the Venetian florin for a while, and then it became probably the Dutch florin was what ruled. And then eventually it was like sterling, until Bretton Woods. And then suddenly something happened and it switched over to the dollars. And right now you have these other groups that don't like American hegemony over these markets. And so they want to find an alternative currency. They haven't come up with it. So what will happen is it won't necessarily happen in the US. It'll happen outside. And suddenly we'll be staring out there and say, guess what? The rest of the world is actually on Bitcoin now. We better get our act together or not. And we probably would want to push it that way because the choice is going to be, it's going to be some sort of BRICS currency that might be the alternative. Not necessarily the euro, but even within Europe, a lot of people, as much as they were against the euro, once they began to realize that the euro reduced a lot of friction within it, they liked it a lot. Yeah. So yeah, I think what ends up happening is that you just have to figure out what was the tipping point that kind of caused one currency to go out of favor and the next one to kind of come in.
Well, and
was it military might or was it a bunch of other things?
Well, if I'm being cynical, I would say it was probably military might.
Yeah, yeah. And historically, I think it probably always was.
Yes. And now I get to do what I've waited this entire time to do. I get to ask a quick random question, as Scott does during his discussions. What is that called when one country is looking at the behavior of another country and trying to decide what to do? That's game theory, and that's all this is. Yeah. It's just game theory. Because if I let my opponent acquire Bitcoin at $20,000 or $30,000, and next year I now need to acquire it and it's $100,000, I have now shot myself in the foot because I cannot get as much as my opponent. So the game theoretic outcome is that you should start acquiring this stuff as quickly as possible.
So, and that also ties into the military aspect, because of course, that means that people in the US military probably right now, where dollars go a long way to buy things, are probably thinking to themselves, but wait, we don't want a situation where we can't have the best military because our dollar is worth nothing versus these other countries that have Bitcoin. So yeah, that's really interesting when you start thinking about it that way.
And you know what the interesting part of all this is that if our country wanted to, it could just print itself $3 trillion and buy a bunch of Bitcoin. Or $5 trillion. Doesn't make any
That's sense. Absolutely crazy. They totally can, can't they?
Right? You could print yourself as much money as you wanted to buy this absolutely scarce, perfect asset that, from a game theory perspective, suggests you should be acquiring as much as you possibly can right now.
Yeah, it's kind of a prisoner's dilemma.
Remind me to never play Risk with you.
Yeah, right. I know Andrew would crush us at Risk. I'll be crying by the end of the game. All right. So any closing thoughts? This is a lot of stuff, and thank you so much, Andrew, for joining us and for correcting our silliness. Yeah.
I want to make a case for this. This book just came out. It's Jason Meyer's book called A Progressive's Case for Bitcoin. The first 80 pages of this you can give to anybody that you know who knows nothing about Bitcoin, and they will fully understand everything that underlies the discussion that we had today. It's an absolutely wonderful read. And the cool thing is that the back end of the book, which is also fantastic, but the first 80 pages is really kind of sets what you need, is all of the is numerous examples of how Bitcoin is allowing humanitarian aid, people in repressed countries being able to transact, sending money to, and all it's just idea after idea. And he also goes very, very deeply into the environmental aspects of mining and proof of work and why it's so important that Bitcoin is set up in the way that it is. And it's a fantastic read. And actually, I got to shout out because I don't even think, is it in this one? Yeah, this was the third. I got the third copy behind his wife.
Nice.
Yeah, it's a wonderful read. And honestly, this is such a deep rabbit hole to go down. It's absolutely fascinating. The culture around Bitcoin is incredibly fascinating. The people that work in this space are so intelligent and just such amazing builders and programmers and idea generators, and like the teams that are coming up with the methane gas mitigation, they're just brilliant. I've talked with them on meetings, and it's just the wall of creativity and value and amazing technologies that's coming based on Bitcoin. It's going to blow your mind over the next few years. It's just incredible.
Very cool.
Yeah.
Wow. I guess I need to hold on to that one Bitcoin I've still got left.
Okay, I just ordered it. I got it's coming tomorrow.
Oh, and for everybody else, of course, I will have Scott and Andrew's contact information, but I will also put the book in there as well. So you can just click on the link.
Yep, it's on its way. Right, so I'll start reading it tomorrow, Andrew. Thank you.
Oh, no problem. I think you really like it. All of my parents and all of their friends are getting it for Christmas. So
there you go. Nice.
Is there then they can't watch this video.
Yeah. No. Oh, right. Don't watch the end of the video. Just tell them
edit it out, John. Edit it out. You know?
They're getting it for beep. All right. Thank you so much, gentlemen. I really do appreciate this. This was quite an enlightening discussion, and I'm sure Scott learned something. I certainly learned something.
I learned a lot. Andrew. Thank you. Thank you very much, Andrew.
I'm super hyped on Lightning Network right now because I really was interested in Bitcoin 10 years ago, but then I was like, oh, this is it just.
I'd never heard of Lightning.
Yeah, I had never heard of Lightning before he started, and that's why I was like, we got to do a video on this. So anyway, thank you, Andrew, so much. Thank you, Scott, so much. Everybody do the like and subscribe, follow Andrew and Scott on Twitter and YouTube and whatever else. Anyway, do all of that good stuff. And I will see everybody in the next one. Bye-bye.